Module 12, Financial Risk Management. Financial risk management is not a long list of bad things that might happen. It is a short, current view of the uncertainties that could affect cash, cost recovery, delivery, integrity, or your firm's ability to perform. Create a risk register with these fields: risk statement, cause, possible consequence, probability, impact, overall rating, early warning trigger, owner, response actions, due date, and current status. A risk should be written clearly enough that a new team member understands it. For example, if workshop participant approvals are received less than 10 days before the event, the procurement timetable may not allow the venue to be contracted through the required process, leading to delay or an unsupported cost. The risks you are likely to see include payment delay, cash shortfall, inadequate or late documentation, budget overrun, scope creep, foreign exchange movement, tax or import uncertainty, late counterpart support, weak subconsultant records, loss or misuse of assets, and integrity failures. The exact list must be tailored to the assignment. A high-volume field project and a desk-based study do not have the same risk profile. Rank each risk by probability and impact, then focus on the few that are high in either dimension. A low-value, frequent missing receipt may need a routine control. A rare but severe integrity allegation may need clear reporting, investigation, and safeguarding arrangements. A delayed invoice may need a cash response and a client follow-up. It is not solved by a workshop attendance sheet. Define early warning triggers. A trigger turns vague concern into action. Examples include an invoice passing its expected payment date, a budget line reaching a set percentage of utilization, a guarantee nearing expiry, an activity lacking approval by a deadline, or a supplier invoice arriving without its required procurement record. Responses should be real actions, not slogans. Manage cash is not a response. Update the 13-week forecast weekly. Obtain a payment status on invoice 12 by Tuesday, and escalate under the agreed route if no release date is confirmed is a response. Assign one person who owns the next action and another who reviews progress. Integrity risk deserves a non-negotiable rule. Never hide, recreate, alter, or fabricate evidence to make a file look complete. If you identify a suspected fraud, conflict of interest, coercion, or irregular payment, preserve records and follow the contract, employer, client, and applicable funder reporting process. Do not investigate beyond your authority or make public accusations without evidence. Review the risk register at least monthly and before major activities, claims, or decisions. Retire risks that are closed, update their ratings as facts change, and escalate risks that exceed the project team's authority. Checkpoint. What are the 3 risks most likely to cost your project money in the next 30 days, and what is the next action for each? If you cannot answer, your register is not yet working. Your action is to create a first risk register with 5 real risks and named owners. Keep it small enough to use, not so long that nobody reads it. Next, we turn those risk responses into the day-to-day controls and audit habits that make good financial management visible.